Hello everyone, welcome to my channel Eco Mystery. Hope everyone is fine and safe. So in the previous class we have discussed about the basic aspects of the partnership. Now we will discuss about the accounting terminologies like interest on capital, interest on drawings and the guarantees amount. So main focus is on the calculation side only. Okay, let's start with the concept interest on capital. So as we discussed in the previous class, whenever it is specifically mentioned in the partnership deed that that the firm has to provide the interest or the capital whatever the amount that partners have contributed into the firm for the running of the business. So in that case firm has to provide the interest on capital by a specified percentage, which is usually stated in the partnership deed only. Okay, so for the calculation, how do we need to determine the interest on capital? Okay, so if we have any opening balance, like if they have contributed in the starting of the year in the business and it is they have not withdrawn any amount from that amount of the capital, so it is considered as the opening amount of the capital, right? So for on that amount we have to calculate the interest for the entire whole year. Suppose I started one business with 10,000 capital, and now it's been 5 years that I'm running the business. Okay, and 10,000 is my only capital that I've contributed. So for the current year also I need to compute the interest on my capital on 10,000 for the entire whole year, considering all the 12 months. Okay, because I have not withdrawn anything and there is no change in the capital amount. Second point is, if they have contributed any additional amount during the year, then how do we calculate it? So whatever the additional amount they have calculated on from the date of the contribution, from the date when they have contributed the additional capital till the date of the whole financial year. Suppose I am running any business, considering the same example, like my opening balance as on 1st April 2026 is 10,000, but in May I have contributed 10,000 more. It means on an additional 10,000 which I have contributed on 1st May, I have to compute the interest for the 11 months from May to March. Okay, and similarly if I have contributed again like 5,000 in October, so I have to compute the interest on capital from October to March. Okay, third point is they are saying that if there is any withdrawal out of the capital contribution, then how it will impact. So they said on the opening capital you have to compute the interest from the beginning till the amount of the capital withdrawn, and whatever the reduced balance net of, like opening balance is 10,000 and suppose you have withdrawn 5,000, so net balance is 5,000. So on reducing balance on the net balance you have to compute the interest on capital for the remaining time period. Okay, so this is how you have to calculate the interest on capital. On the opening balance, if there is no change, you have to calculate for the entire year. On the additional capital, whenever it is contributed from the date of that additional contribution till 31st March, and if there any withdrawal, so on the opening capital till the date of the withdrawal, and on the reducing balance you will compute it for the remaining period. Or either you can do one thing in that case, you can compute on opening balance for the entire year, and for the date of the withdrawal, whenever it is happened for the remaining period, when it is remained withdrawal, you can compute and deduct that interest from the opening. Okay, let's understand with the example, then you are able to get it more understanding. Saloni and Srishti are a partner in a firm. Their capital account as on 1st April showed a balance of 2 lakh and 3 lakh. It means their opening balance is 2 lakh and 3 lakh. On 1st July, it means after 3 months, they have Saloni introduced additional capital of 50,000. It means 2 lakh 50,000 is a updated balance as on 1st July for Saloni, and Srishti introduced 60,000. It means for Srishti it is 3 lakh 60,000. On October 1st, Saloni withdrew 30,000. It means on 1st October, Saloni withdrew 30,000. So what will be the updated balance for the Saloni on 1st October? It is 2,20,000. And Srishti withdrew 15,000 for other capital. So it means 3,45,000 will be the updated balance for Srishti, and we have to charge the interest 8%. So how do we calculate? First of all, we can do one thing on the opening balance, because since 2 lakh and 3 lakh is available for the entire year, so we can compute for the entire year, right? On the additional capital, since 50 and 60,000 will be contributed on 1st July, so it means they have we have to compute the interest from 1st July to 31st March, so it will be 9 months. For the 9 months we have to calculate the interest. Okay, and drawings. Saloni withdrawn on 1st October. It means for the 6 months she has withdrawn 30,000, right? So it remained withdrawn for 30,000. So 30,000 into 8% for the 6 months you can calculate and reduce from the balance. This is the one approach that you can follow. Okay. And similarly for the Srishti also, like 15,000 she has withdrawn on 1st January. So for the 3 months you can compute. So this is the first time method where I've given the answer according to first method. Second one, we can do one thing. We know that this is the opening balance till June only. So for 3 lakh, 2 lakh and 3 lakh, the balance will be only for the 3 months. So first of all, we'll compute the interest for 3 months only. Then the balance will be increased. So updated balance 2 lakh 50 and 3 lakh 60. So for Saloni, since she has withdrawn on October, so from July to October, it means July, August, September. For the additional 3 months, we have to compute the interest on 2 lakh 50,000. Okay, and for this one 3 lakh 60,000 for 6 months, because Shrishti has withdrawn on 1st September only. Okay, so July, August, September, October, November, December. So it been 6 months. Okay, now after the withdrawal, the updated balance 2 lakh 20,000 on Saloni. So 2 lakh 20,000 will need to compute the interest for 6 months, and for the Srishti 3 lakh 45,000 will be for the 3 months. So it up to us how do we need to calculate the interest. There are two types of method. In the case of the withdrawal, it's up to you. Either on the opening balance we will compute the interest for the opening year, or whatever the additional capital we have contribute, we have considered for the from the date of addition or additional contribution till 31st March, and we can reduce the interest on capital till it's remain withdrawn. Otherwise, we can do one thing. We can uh, consider the interest on capital till the updated balance, right? So there are two types of method. I have given the explanation for each type of method. So it's up to you how which method you want to consider. Okay. Next, interest on drawing. So first of all, it is essential for you to understand what is drawing. So any amount has been withdrawn by the partner continuously, or any uh, you know uh, any amount they have withdrawn for your personal expenses, it is termed as a drawing. So now we have to consider like how we need to compute the interest on drawing. Okay, so first of all, for calculating the interest on drawing, we need to check the periodicity, or we need to consider the frequency. If the partner is withdrawing every month, okay, so we need to check first, like whether it is beginning at the month or end of the month or the middle of the month. And first of all, before checking this, the interest on drawing method is amount withdrawn every month, or total amount withdrawn per year, into rate into average period divided by 12. So always you will be know that what is the rate, or at which rate you have to give in the interest, right? And always you know how much the person is withdrawing, or how much the partners are withdrawing from the firm, right? The point is to calculate is average period. How do we calculate the average period? Okay, so for that, we need to check if the partner is withdrawing every month at the beginning of the month, then we need to consider the average period 13 by 2. If the partner is withdrawing at the end of the month, then we have to consider 11 by 2. But if the partner is withdrawing the money at the middle of the month, then we have to consider 6 as the average period. So the formula is for calculating the interest on drawing is very simple as interest on capital, except we have to consider the average period also. And now our focus is to calculate the average period. And for calculating the average period, first of all, our focus point should be what is the frequency, monthly, quarterly, and if it is monthly, at which date, like middle, end, or beginning. If it is beginning, 13 by 2. If it is end of the month, then 11 by 2. And if it is middle, it should be 6. Okay, next is if the frequency is quarterly, either they can withdraw at the beginning of the quarter, either they can withdraw at the end of the quarter. Okay, if it is beginning at the quarter, then we need to consider 15 by 2 as the average period. If it is withdrawn at the end of the quarter, then we need to consider 9 by 2. Okay, and third is sometimes it might be possible that the partners doesn't have a defined frequency, they can withdraw it at any time. In that case, we need to apply the actual period instead of the average period, so that the period for which amount remain withdrawn, it means you have withdrawn some amount of capital on 1st December. It means I should say 4 months the capital, the amount will be withdrawn or remains withdrawn. So for the 4 months you have to compute the interest on drawing, or we can say that the amount which is not ideally available in the firm. Okay, so for that month, for that 4 months you will calculate the interest on drawing. Okay, so let's try one example. Johan Ibrahim, a partner in the modern tours and travels, withdraw money during the year ending for his capital account for his personal use. Calculate interest on drawings in each of the following alternative situations. The rate of interest is 9% that we have to consider. If we withdraw 3,000 per month at the beginning of the month, first of all, how much he is withdrawing? 3,000 per month. It means 36,000 he will withdraw uh, in each year. Okay, and he is withdrawing at the beginning of the month. So what will be the average period? 13 by 2. So how do we compute the interest on drawing? Amount, total amount withdrawn 36,000 into rate of interest, which will be 9%, into average period 13 by 2, and then all the amount should be divided by 12, so that we can compute the interest on drawing per month. Okay, next point is, if an amount of rupees 3,000 per month was withdrawn by him at the end of the each month, then average period would be 11 by 2. Okay, now in the third point, if the amount withdrawn were 12,000, so it means now they are saying that whatever the amount he is withdrawing, it is not static, it will be changed on every day, on every month, right? So they are saying that 12,000 he has withdrawn on June, so it means from June to March the amount remain withdrawn. So for how many months you have to compute the interest on drawing? For 10 months. Next amount, 8,000 on 31st August, so it means you have to compute from 31st, you should say September to March, so it will be 7 months. Next amount, 3,000 on September, it means 6 months you have to compute. 7,000 on 30th November, so from 1st December to 31st March, it means 4 months. 6,000 on 31st January, it means 2 months, like Feb to March. So for the 12,000 should be multiplied by rate of the percentage, and it should be divided by 10 by 12. Okay, and in the similar manner you will have to compute the interest for the entire. Okay, so on the interest on drawing, the formula is total amount withdrawn into rate into average period and divided by 12, so that we can compute the interest on drawing for each month. Okay, hope everyone is with me. Okay, let's understand another point, guarantee of profit to a partner. So sometime it might be possible that we have introduced a new partner in the firm by giving him a guarantee that he will or she will able to earn a minimum amount, right? But sometime, or however, due to business operation, our profit is not sufficient, or they are not able to earn whatever we have agreed. So for satisfying them, we have whatever the old partners, whoever the old partner in the firm, they have to give their profits to them. Okay, suppose Madhulika and Rakshita, who are a partner in the firm, decided to admit Kanishka. It means there are already two existing partners in the firm, and they want to add third one in the firm, giving her the guarantee that she will able to earn 25,000 as a firm profit. Okay, the firm has earned a profit of 1,20,000 during the year, and their earlier agreed ratio is, the new agreed ratio is 2:3:1. It means the third partner will able to get the profit 1:6. It means she will able to earn only 20,000. Okay, but we have guaranteed that, we have agreed that she should able to earn 25,000. So now the shortage of 5,000 she will want to earn more, right? So that 5,000 should be absorbed by Madhulika and Akshita. It means that 5,000 should be absorbed by them. Then it means 5,000 should be reduced from their profits. The question is in which ratio it should be reduced. So it should be so now in the question they are very, it is silent, like in which ratio they have to absorb. So we will divide that shortage in their profit sharing ratio, 2:3. Okay, another concept is past adjustments. Sometime it might be possible that we have to account the interest on capital, interest on drawing, or any profit appropriation, or any salary commission, manager commission, but we have forget to commit, like it is a omission only, or suppose it is an error that we have not recorded. So that we need to record, right? Instead of correcting the entire final account, it will be helpful that we can directly post a entry in the capital account instead of rectifying or having a retrospective impact in the earlier accounts. Okay, so let's understand with the example. Nusrat, Sonu and Himish are partners sharing profit and losses in the ratio of 5:3:2. Okay, the partnership deed provide for charging interest on drawing 10%. It means whatever they have withdrawn, the firm is able to charge the interest at 10%. The drawing of Nusrat, Sonu, Himesh during the year ended 20,000, 15,000, 10,000. It means on the drawing how much firm is able to charge the interest, and it will be a firm income, right? To on 20,000, 2,000. On 15,000, 1,500, and on 10,000, 1,000. Total 4,500. The firm is able to charge the interest on drawing, and that will be debited to the capital account, right? But whatever the so it is a firm income, right, and should be appropriated and should be divided between the profit sharing ratio of the partners. So it should be divided between 5:3:2, right? So if we divide it, that how it will come. For the Nusrat, 2250, for the Sonu 1350, and Himesh 900. Okay, so for the Nusrat, how much we have to debit their account? 2,000, right? And how much amount we have to credit the account? 2250. It means additional amount, that how much firm has to give to the Nusrat? 250. Okay, so it means Nusrat account should be credited. Okay, for the Sonu, 1,500 we have to charge back, and 1350 we have to give, the firm has to give it to the them. So it means 150, the firm they have already have, so firm has to charge back, so it should be debited. And similarly for the Himesh, so the journal entry would be Sonu capital account, Himesh capital account to Nusrat capital account. Okay, so these are the four concepts that we have to learn: interest on drawing, interest on capital account, any guarantee amount, or any past adjustment. So for the interest on capital, the formula is whatever the amount they have contributed into interest on capital percentage and their time period. Interest on drawing, whatever the total amount they have withdrawn into interest on drawing percentage into average period. And for the guaranteed amount, whatever the amount it is shortage in providing that particular amount, that has to be bear by the existing partners, and it's spent upon them, and what ratio they have to bear that particular cost. That cost will be reduced from their profits. Okay, and for the past adjustments, instead of recording into a previous year accounts or having a retrospective impact, we can directly record in the capital account. Okay, so we have to post the entry on the net impact. Okay, hope everyone is able to understand the concept. If you have any issues, you can contact me and let me know.